Chinese real estate giant Evergrande has suspended its listing on the Hong Kong Stock Exchange. Over the weekend, the trouble company was ordered to demolish 39 buildings on the island of Hainan within 10 days for violating urban planning laws. Evergrande has been struggling to repay more than €200 billion in liabilities since Beijing ordered a crackdown on real estate sector debt and consumer speculation. In recent months, the company had promised to finish 91.7% of its unfinished projects and deliver them to buyers in a desperate bid to salvage its debts, despite having missed the earlier payment of more than €1 billion. Failure to pay suppliers and contractors led to sustained protests from home buyers and investors at the group's Shenzhen headquarters in September. Evergrande's woes have had a knock-on effect throughout China's property sector, with some smaller firms also defaulting on loans and others struggling to find enough cash. Chinese authorities say they have no intention of bailing out the organisation.
Well, let's find out more on this story now and its possible implications for the Chinese economy and beyond. Baocheng Liu is director of the Center for International Business Ethics at the University of International Business and Economics in Beijing. Well, thanks for taking time to speak to us here on the programme. Well, authorities have ordered the property developer to demolish several of its buildings, including a residential complex. Just how unusual is that move?
Well, this incident is considered to be a gray rhino instead of a black swan because since the first day of the last year, the Chinese central government decided to stamp out the excessive debt ratio in the real property sector, and therefore they issued a very tough and rigid line whether the debt ratio versus the assets versus the equity position versus the cash in hands of the company is there to exceed the red line. If the red line is really stepped over, so the banks are ordered not to lend to the real estate developer. So definitely Evergrande and among several other companies are really stepping far over the red line. So therefore, they are really having a very tough time.
Given the shockwaves that Evergrande's position has sent across the global markets over the last few months, at this stage now, what do you think would be the consequences if it were to collapse?
Well, of course, the ripple effect is going to be huge because they have omnipresence development in over 200 cities, both at the second-tier city and third-tier city. So therefore, there's going to be a massive movement from the consumers who paid the money and didn't really get the house, and also there will be a myriad of defaults on the principal and interest payment, and they, also that they hire nearly 100,000 people to work on those projects. So people will lose jobs, and those suppliers of raw materials and companies who are really working on the peripheral sector will also suffer a big deal. This is something that we are not really happy to see.